Hey, welcome back to the Tech Corner. I'm George Tsilis, Senior Markets Contributor here with the Schwab Network. On this week's edition of the Tech Corner, we're going to be covering Western Digital Incorporated. Now, Western Digital is a prominent player of data storage devices and solutions, primarily based on hard disk drive technologies. Multiple market segments for the business include producing internal and external hard disk drives, data center drives, portable drives, both for home and enterprise use. These products serve various markets such as data centers, PC, graphics, networking, automotive, industrial, and consumer electronics. Following a strategic separation going back to February of last year in 2025, Western Digital spun off its flash business into a separate entity called SanDisk Incorporated, while Western Digital has concentrated on its hard disk drive business. This move positioned the company to better capitalize on growth opportunities, particularly in the cloud data center market, where hard disk drives remain a cost-effective solution for large-scale storage needs. Now, in the competitive landscape, Western Digital primarily competes in the hard disk drive markets with companies like Seagate Technology in the United States, but also Toshiba Electronics Devices and Storage Corporation in Japan. These companies are main competitors in the hard disk drive sector, with Seagate and Toshiba focusing on providing high-capacity storage solutions for both enterprise and consumer end markets as well. Now, when it comes to unique value, Western Digital's focus on high-capacity hard disk drives, as well as ultra-smart SMR technologies and cloud network storage, provides a competitive advantage in the data center market, enabling the company to capitalize on increasing storage demands. Now, let's take a look at some recent news for Western Digital. Now, going back to the 29th of January, the company posted its fiscal second quarter 2026 earnings and sales. Western Digital posted revenue results of $3.02 billion, beating the estimates by $80 million. Now, this number was higher by close to 28% year over year. The company also posted an adjusted earnings per share of $2.13, up 25% year over year. These metrics both bested estimates. Beating on both of these metrics, top line sales and bottom line earnings, have drawn positive reactions from both investors as well as analysts. More importantly, the company also reaffirmed its commentary of more than 50% expected gross margins exiting calendar year 2026. Management also noted they secured robust customer agreements with two major customers through 2027 and even one through 2028, which provides a clear indication that customers are unwilling to risk falling short of storage capacity and potentially underserving their own customers as AI-related demand continues to march higher. Now, the company's results confirm this is not just a demand story, it's a secular pricing and margin regime shift. Now, let's take a look at some other positive attributes with Western Digital. First off, the company has demonstrated strong financial performance, with last quarter's revenue growth of nearly 28% and gross margins for the quarter reaching mid-40% range. This underscores its operational discipline and potential for sustained growth. The data center storage segment is thriving, driven by AI demand and record hard disk drive revenues, and promising partnerships going forward, which are reflected in the strong outlook. Western Digital remains attractively valued despite a recent rally, supported by its robust data center prospects and a healthier balance sheet. Both sales growth and profitability trends are rising above their respective 5-year averages, indicating efficient profit generation. For example, the estimated revenue growth on a forward basis is around 28%. This is nearly 3 times the historical average of around 10.62%. Gross margins on a trailing basis around 42.7%, significantly higher above its 5-year average of 26%, with estimates going forward around 45 to close to 50% by the end of 2026. High gross margins suggest strong pricing power and high-end market demand. On a bottom line basis, net income margins are very robust, nearly 36% of sales, besting the sector median of around 5%, and this is significantly higher than the company's own 5-year average around 2%. This suggests there's a high return on equity investment. Now, some may be concerned based on the price action for Western Digital, but if we look at the valuation profile, it's still relatively robust. For example, by the end of fiscal year 2026, the company is estimated to earn $8.74, and by the end of June 2027, they're expected to nearly increase that by 50% to $12.79. In comparison, that number is more than double the trailing 4 quarters earnings of around $6.93. Now, despite many positives for Western Digital, we have to also address some of the concerns. Western Digital operates in a fundamentally deeply cyclical industry, and aggressive capital expenditures could threaten its pricing and margins, making valuations appear stretched. The AI-fueled demand boom may not necessarily sustain Western Digital's current profitability levels, and industry-wide capacity expansions and potential demand headwinds could threaten the long-term sustainability of current profitability. And lastly, despite recent successes, Western Digital faces competition from Seagate and others in the hard disk drive market. And any shifts in technology or market dynamics could impact its profitability. Now let's take a look at the technical picture for Western Digital. As we can see, the current technical picture for Western Digital is very strong, and the chart pattern suggests that upward momentum may continue. Over the past 52 weeks, the stock is up nearly 300%, and it has significantly outperformed the market over the last 30 and 60 trading days when compared to the S&P 500. From a near-term perspective, the stock has advanced significantly above its rising 10 and 20-week moving averages, which suggest a possible healthy retracement to one of these levels in an overall bullish trend continuation pattern. The stock is also trading above a rising 50-day moving average, which continues to validate the strong technical condition for WDC. The stock is also trading above its 200-day moving average, which is pointing up, indicating that the intermediate term trend is still bullish and positive. Now, if Western Digital stays above the 50-day moving average and resets momentum, that's the classic trend continuation look. If it loses the 50-day moving average with volume, then you have to start respecting the possibility of a deeper retracement, even if the longer-term narrative remains strong. Lastly, Western Digital's chart formation indicates a strong rising trend. However, upside momentum, as measured by the weekly RSI indicator, is positive, but beginning to slow towards the 50 midpoint level. This suggests the stock may enter a digestion phase after a significant near-term parabolic run-up. Now, in summary, Western Digital's strategic shift from a commodity digital storage supplier to a critical AI enabler has resulted in robust financial performance driven by strong demand for hard disk drive and cloud computing storage. The company is in a rare window where AI demand is high, supplies are tight, and are both pushing in the right direction for the company. The company's latest quarter and next quarter guidance both confirm that the fundamentals are unusually strong. Despite that growth, Western Digital may still be trading at a relatively low valuation forward multiple. The company continues to deliver innovative solutions to a wide range of applications, including cloud data centers, enterprise storage solutions, and customer devices. Over time, the company has been able to leverage its technology portfolio expertise and cost leadership to maintain its position as a key player in the data storage industry in the past, as well as potentially for years to come. All right, that's it for this week's edition of the Tech Corner. Please don't forget to like and subscribe to the Schwab Network. I'm George Tsilis. We'll see you here next week.